morning, traders. It is January 9th at 9:56 EST. While S&P dancing in correction, let's walk down memory lane on oil, going back all the way to 2016 and take a look what to expect on oil before oil news at 10:30 EST. This is a chart on oil monthly from 2016. What do you see on oil? You see oil reaching Fibonacci reversal zone. You see oil at 29. This is where a knowledgeable trader monitors for bullish reversal. In 2015, oil stages worthless bullish correction and collapses from key Fibonacci resistance at 70 level. And this is what oil does next. Stages bullish rally. No surprise. This is oil in 2016. Very powerful reminder. When Fibonacci reversal zone is present, expect reversal. This is where price reverses 80+% of the time, no matter what you trade. No matter if it's Apple, as we will take a look, as we always do. No matter if it's S&P, no matter if it's euro, if it's pound, if it's cryptocurrency, it's Amazon. It's all the same. This is oil in the start of 2018. Reaches key Fibonacci resistance. In the course you learned that bright green line is key Fibonacci target. 2 years later, bullish rally overextended, skyrocketed from trend inception, reversal zone until key Fibonacci target. What do you see in front of you? Fibonacci reversal zone. What does oil do when it comes to Fibonacci reversal zone? Exact same thing as S&P doing this morning, which again we will take a look, as we always do. This is oil next. Selling pressure close to Fibonacci reversal zone reaches key Fibonacci resistance, which is becoming key Fibonacci support. Where oil bouncing from? No surprise. Again and again and again. And start staging selling pressure from Fibonacci reversal zone. What do I say? 64 is out, oil will sell off. 55 is out, oil will head to 50. 50 is out, oil will head to 40. Has oil done that? Yes or no? This is oil long-term chart. No surprise what oil had done next. Key Fibonacci resistance is key Fibonacci support. This is oil now. Oil bouncing from key Fibonacci support. Do not short. This will be crucial test on oil. This is not the place to buy. This is key Fibonacci resistance. Exact same level where oil struggled the entire 2017 is where oil will test us to the core next. How powerful the pullback on oil at this level will determine if oil will skyrocket to drastically higher levels. So, this is long-term chart that day trader always uses before making day trading decisions. Now, let's move to day trading hourly chart. This is oil from the trading room from last week. When we reopened the trading room last week, this is where oil was. At the end of the minor trend, which is exact same institutional resistance, where oil is now. Spectacular pullback, most important rule in a play, and oil skyrockets to next level. January 7th, this Monday. Where again oil is doing exact same thing, collapses, finding buyers, and doing this corrective dance just like S&P again. Agree? What is instantly we see? Bullish rally on oil overextended. This is not the place to buy. Powerful pullback is a place to buy. Buy at support, not into resistance. And at the time of the news, oil collapsing completely to here, it's a gift. It's a beautiful place for day trader to be. Overextended bullish rally, oil taking a massive pause. So, we will bring up this chart at the time of the news. We will convert this chart to 1-minute chart. The first 5 minutes after oil news, we will allow oil to settle down. And only then we will see what oil will do. Selling pressure here. Bullish push at key support. Do not short. And this is exact same dance on S&P this morning. Doesn't matter if you trade 1, doesn't matter if you trade 5, whatever chart you trade. What is the worst place to be? Overextended bullish rally at key resistance. Agree? So, when both oil and S&P at institutional resistance, this is the morning you are glued to the screen. This is the morning you are monitoring for selling pressure. Both S&P and oil not far off. This is a key. So here we go. Expectations on oil minus 2 ME. More negative the number, more bullish the news. More positive the number, more bearish the news. It is absolutely crucial to understand the news of the instrument you trade and how it impacts instrument you trade. S&P doing exactly what we expected, which is endless corrective dance as S&P had done the entire Monday, Tuesday, Wednesday mornings. Take a look. As we discussing, what is the smartest thing to do? Take your dog for a walk. Practice your golf swing. Do not be tempted to buy here. If you do, you're trading against yourself. Doesn't matter if you trade 5, doesn't matter if you trade 15, doesn't matter what you trade. Here's oil. Oil news at any moment, traders. This is key Fibonacci resistance that's been present in the trading room for the last week in a play in front of you right now on oil 1-minute chart. Oil news at any moment. Again, first 5 minutes we ignore what oil does. What did we discuss? Our bias firmly bearish, not bullish. What did we discuss? This is crucial support. This is your day trading range. Oil had done exactly that. We have no idea what the news is. We're only respecting news due to volatility. What is the news on oil? Let's take a look. Pretty much as expected. Minus 1.7 versus minus 2 ME is as expected. Pretty close. So, if oil selling off, it's a beautiful thing. If S&P selling off, it's a beautiful thing. We knew and we discussed this. This is not the place to buy. And this is how Fibonacci keeps you out of trouble. Fibonacci level on any chart, doesn't matter if it's 5, doesn't matter if it's 15, shown you very, very clearly, not the place to buy. Agree? Fibonacci level on 15-minute chart shown you, not the place to buy. Clear on that? As expected. And that's the predictive power of Fibonacci. And that's what you can use on any instrument you trade. So, we will constantly go back and forth to oil news. But please remember, this is S&P Mini Futures Trading Room. And this is S&P. 15-hour war zone. Market at key resistance. I warn you, not the place to buy. I warned you, if you're touching this, you're trading against yourself. Rules are met, take a trade. Bias is bearish. Clear on that? No matter what chart you trade, no matter if it's 1, 2, 3, 4, 5, 6, 7, 11. Fibonacci level present in front of you in the trading room since Monday, identified in the class last Friday in a play, can be in a play for weeks to come. Crash and burn S&P, we've been extremely patient. You're doing exact same thing as you done yesterday at key Fibonacci resistance, very, very close to the same level. And if price collapsing here, what are we expecting? Key support. Crucial hour on S&P. Knowledgeable trader knows that. Knowledgeable trader didn't touch any fake outs. Knowledgeable trader didn't have sweaty palms. Knowledgeable trader knew the only good thing that will happen if market will crash and burn. And if that's the case, it's a beautiful thing, because Fibonacci said so. Pretty good news on oil. How many points did oil already collapse? Almost 100. My goodness, is it possible? Fibonacci level present in the room for almost a week had shown you very, very clearly. It doesn't matter that the news is good. Market will crush. Do you remember this exact same thing that happened on Apple? Here's exact same dance on Apple. This is Apple at the start of 2018. Do you see reversal zone on Apple next? Apple reaches reversal zone 10 months later. What does Apple do? Comes out with spectacular earnings. Does it mean anything? Of course it does not. This is reversal zone, just like on S&P, just like on oil. What does the price do? Crushes after key support is broken. Spectacular earnings don't mean a thing. Fibonacci reversal zone mean everything. This is what Apple does next. Poor Apple. Where is Apple now? Ladies and gentlemen, here's Apple. Apple sold off from Fibonacci reversal zone from 233 until, my goodness, 141. $90+ per share. Do you want to buy this? Ouch, ouch, ouch. Exact same thing across the board, no matter what you trade. When price comes to reversal zone, expect reversal. And that's the reason oil selling off. And that's the reason you're seeing what you're seeing on S&P for the last 15 hours. It's all the same. Not the place to buy, the place to exit. And if rules are met, and if price is not in correction, take a trade. No sweaty palms, no heart palpitations. If trading on indicators and news worked, every single person on the planet would be Bill Gates. It does not. What works is price action and Fibonacci. Every single student in the course knows that. Class 1. So here we are on oil, 15 minutes after the news. Oil collapsed 90 points. Pretty darn good news. Oil came out as expected. Slightly below, but we expected sell-off because Fibonacci said so. Currently S&P selling off for exact same reason as oil, because we discussed this is a morning you're dealing not just with day trading resistance, you're dealing with institutional resistance. Your bias firmly bearish. Only Fibonacci can give you this days, hours, minutes in advance. Nothing else ever will. Just like Apple. Just like everything else. So sell-off on S&P is taking a massive pause. No matter what chart you trade, every single trade I convert to 1 minute chart, so you can see to the tick the power of the method. This is what's playing out right now across the board. Knowledgeable trader knows more powerful bullish pullback, better next short will be. However, this is exact same level that's been present on Apple in 2016. Do you remember Apple at 93? Posted multiple videos, posted on LinkedIn, posted on YouTube. What happened with Apple at 93? 2015, Apple comes out with the worst earnings in 13 years. Does it mean anything? Of course it does not. Just like good news on oil does not mean a thing. Fibonacci means everything. This is what Apple does despite worst news. Boom. 91, 93 area to 181. Do you want to trade on the news? Do you want to buy Apple at reversal zone when spectacular earnings come out? Choice is yours. Go to the source. Do not buy at reversal zone, no matter how beautiful the news are. Do not short into support, no matter how horrific the news is. And this is exact same moment on S&P. Exact same level. Give us 10-15 points, it will be a gift. Why? Trading 101, we will be back up to this resistance. Monitor for short, it will be even better this time around. Agree? That's simple. Pure price for entry and Fibonacci for exit. What you decide to trade, absolutely up to you. There is no magic bullet in trading. There is no magic bullet in anything. The only magic bullet is knowledge. Master this, and the sky's the limit. You will stop wasting your time. You will stop sweaty palms. You will stop heart palpitations. You will know extremely well that if you spend less than 10 hours in front of the screen per week, if you place less than 3 trades per day, if you walk away from corrective markets, life and trading becomes very joyful. So, price is doing exactly what we expected. Doesn't matter if it's S&P, doesn't matter if it's oil. And if price will continue at this level, nothing here for knowledgeable trader to do. It is firmly counter-trend move. Sellers in charge. As I warned you sincerely this morning, this is not the place to buy. This is a place to short from. So this is a bounce on S&P an hour later as we expected, and this is a bounce on Amazon. Just like 91 area on Apple, this is Amazon. Absolutely no surprise, and this is Amazon in the fall. Do you remember this? Selling off from reversal zone as expected. Spectacular earnings don't mean a thing. Fibonacci reversal zone mean everything. And this is Amazon now. Bouncing from key Fibonacci support. And what Amazon will do next is a key. Just like S&P, just like oil, just like any instrument you trade. Exact same place where S&P rallying from right now was key support on Netflix in 2018. Spectacular earnings don't mean a thing. Netflix start crashing. This support is out. Netflix added 7 million subscribers. How is that possible? Because Fibonacci said so. Netflix reaches Fibonacci reversal zone, stages correction. And this is Netflix months later at Fibonacci reversal zone. This is Netflix this morning. This was brutal, nasty correction. Knowledgeable trader knows that. This is pretty impressive reversal. Knowing what to do with your position, knowing where to enter and to exit is a key. Speculation is never an option. And if Netflix collapsing again down to reversal zone, it's a beautiful thing. And if not, knowledgeable trader knows what to do. Powerful lessons every day, no matter what you trade. Netflix 2018, identical bounce. In July, in October, just like S&P is doing now. Charts are twins. So if you would love to master price action in Fibonacci, please review the information on the website under courses, listen to the students, and never hesitate to contact me. Any of the courses appropriate for any trader level who trades on any instrument, any time frame, any platform. You would like to take it slow? Take a look on foundations information. You would like to take it with everything? Even if you beginner trader, mastery course appropriate for you. If you're interested in private mentoring, pretty please do contact me, and I look forward to speaking with you.